JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 1st of March 2021, guys. So yep, welcome everyone. Welcome to this first trading day of this week, first trading day of March. So yep, guys, I hope this one will be a good one for you, so this month of course, but yeah, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, and well, look at this beautiful reversal here from this upside support line. Now this is what I talked about last week, guys, when I was covering Nikkei, and I was saying that keep your eyes on this upside line drawn from the low of the 30th of October, because if by any chance it does provide, or I should say continues to provide, decent support, then yes, we could see this one pushing back up here. However, I'm going to be very careful still, because we do have this little downside line now forming, or I should say formed, taken from the high of the 16th of February, so the highest point of February. So in a way it could push higher, but I'll be very careful near this downside line. So in other words, basically we could be getting ourselves here an example of where the chart is coiling up here. So so yeah, we're getting into a slight squeeze. So yep, of course, we'll see how that's going to play out, but yeah, if you're not really comfortable here, let's say trading in between these two lines, that's understandable. You can wait before we get a clear breakthrough one of the lines in order to consider the next short-term directional move, guys. So yep, keep that in mind. Jumping into Shanghai Composite very quickly, so also having a nice reversal here from this upside line, so everything is working out beautifully here. So this upside line is taken from the low of the 19th of March, and in a way, yes, there is a chance for this one to drift higher. However, if you remember last week, I said that in order to go for some higher levels, well, I would actually prefer maybe to see a push back above this 3,587 territory right here. And then yes, we could go maybe for some higher levels, because at the same time the index would be placed back above its 21-day EMA, and maybe more buyers could see this as a good opportunity to step in. So yeah, keep that in mind. Of course, for the downside, well, I mean, a break of this upside line is needed, and maybe just for that extra confirmation, a drop below all this area right here. A drop below the 3,446 territory, somewhere around here, which is the low of the 29th of January here, and then yes, lower levels could be met. So keep your eyes on that one. For now, everything's looking quite interesting here for Shanghai Composite. Of course, more interesting for the I would say for the buyers could be, but we need that confirmation break first. We cannot really kind of go blindly here for some higher levels, because again, you can see that the index is already closed, and we're still basically trading below this little short-term tentative downside line here. So be very careful with that one. Yeah, guys, for now we'll just have to take it from from here. We'll just have to keep an eye on these areas, but well, patience is gold. And another index, the German index, the DAX, and you can see that on Friday, the index drifted below this 13,830 zone and remained below it. But yeah, I mean, although it did try to, you can see that the bulls really tried to fight hard and tried to recover here. They found good support, of course, near this 13,665 territory, from which the index rebounded here, but it failed to move back above this 13,830 mark. So that's why, guys, for now I would say be very careful with this one. Also, we have a bit of a kind of difficult situation here where you can see that the index here is kind of struggling with some key resistance areas. Now, if you want to look at some higher levels, well, probably the suggestion here is to wait for a break of this downside line here, taken from the high of the 8th of February, and then yes, maybe higher levels could be met. Of course, we'll target the all-time high, which is around the 14,169 territory, and if that gets broken, of course, this will confirm a forthcoming higher high, and yep, higher levels could be met. But at the moment, guys, it's like I said, it's a difficult one. It could even retrace back down here. It could go and test this upside line drawn from the low of the 11th of December, so from where it could rebound and push back to the upside. So keep that in mind. DXY, so dollar index, and well, a fantastic trading we saw on Friday for DXY here, and yep, we managed to break this downside line drawn from the high of the 5th of February. So yep, a bit of positivity here, but I would say still I need that push above this 91.05 territory. So although there are indications that the dollar index could rise a little bit more, but to be a little bit more on the safe side, guys, because of what I don't want to see here is basically this one maybe traveling a little bit higher, giving us a false breakout here on this 91.05 level, and then reversing back down. So basically similar story, just the opposite way. We have it here near this 89.96 zone, the one that I keep talking about, and I'm still keeping an eye on this level because for me, I need to see a nice daily candle staying below this area in order to go for some lower areas, lower levels. I would say the same story with the upside. I need to see the daily candle staying above this 91.05 territory, and then we could go for some higher levels. So that's why, guys, be very careful for now. Yes, it looks quite tempting, but again, we are at a very interesting spot right now in the market. We could see some maybe correction at some point, but again, also be very careful because it seems that the bulls are still not giving up. So that's why we need to be, if the market starts rising again, then maybe if the equities start rising again, then maybe we'll see DXY kind of drifting back down. So again, keep that in mind. Also keep your eyes on the economic calendar today. We do have the German CPI figures, inflation figures, preliminary of course, but nevertheless something to keep in mind. We have the US ISM manufacturing PMI figures coming out today. So yep, that's something to keep in mind. Also the Canadian, excuse me, also the Canadian manufacturing PMI figures. So yeah, a bit of data. Of course, the main focus this week will fall on the non-farm payrolls on Friday, but we still have a full week to go through. So let's not rush into anything. Let's just go step by step. So for now, long story short, for DXY, keep your eyes on these two levels that I said, that I mentioned. Gold. Now, gold is a tricky one. So on Friday, we saw a huge decline here, dropping below this area of this key, the 1760 territory. And this morning, we're seeing a bit of a rebound. So, okay, maybe that's kind of healthy still, but in a way, if it struggles to, let's say, get back and stay above the 1765 territory, somewhere around here, then maybe we could see another slide here and possibly a move towards a move towards the 1704 mark right here, or even this 1682 zone, roughly around there. Or actually, let me just adjust this. There we go. That's the lowest point of June here. There we go. So this 1670, 71, approximately around there. So what I'm keeping an eye on here for now is, of course, this hurdle, this barrier, these levels, because it's going to be quite interesting to see if we can actually overcome those. If we can, then maybe we'll just go for a bit of a larger correction to the upside, especially if the price climbs above the 1785 zone right here. But if it doesn't, then maybe yes, another slide here could be possible. Either way, guys, for now it's a little bit still on the negative side, I would say. We are still trading below this this downside line right here. So there's a lot of indication basically for the downside still, and but the downside might get limited near some of these upside lines here. So one of which is let me just grab this one very quickly. There we go. So yep, that's the one. So that's taken roughly from around the 22nd of May of 2019. It's a tentative one, but nevertheless still an upside line. So let's keep an eye on this one, and let's keep an eye out today on these two barriers. Jumping into US oil, so which is WTI oil, and here, for example, you can see that the price is kind of struggling to move higher, I would say. So we're now we were back below the 62.25 zone. I talked about this on Friday, and also basically what I was saying, that if we get a drift, maybe move back below this area and we see a daily close, then this increases the chances for a possible kind of a larger correction here to the downside. Now this morning we're seeing a bit of a push higher, but again, let's wait for this day to finish, because if this still ends up staying below the 62.25 territory, then I'm going to get a little bit more comfortable with the idea of seeing maybe a bit of a larger correction here to the downside. For me to aim for some higher levels, what I would need here is a push above the highest point of February here near the 63.79 zone, and then yes, we could go for some higher levels, because this would confirm a forthcoming higher high, and more buyers could join in. Jumping into Bitcoin, and Bitcoin is, well, it's a little bit interesting, I would say. So on one hand, we are seeing this hurdle right here, this 44,900 and let me just 50, I think it's actually, let me just zoom in here a little bit. So 45,000, that's, I think that's going to be the hurdle that I'm going to keep an eye on. So the 45,000 mark somehow is providing still good support. Now if it continues to do so, then yes, maybe we could see a bit of a push higher. However, with the upside, it's a little bit tricky at this point in time with the upside, because first of all, we are below this upside line here drawn from the low of the 27th of January. We are below the 21-day EMA, so there are some kind of chances here for this one to actually drift lower for a larger correction, because we are still trading above this upside line drawn from the 11th of December. So however, if you want to go for some for a larger correction to the downside, well, then at least wait for another drop below the 45,000 mark, because as you can see, we keep getting those drops, but we don't get that daily candle staying below it. So that's why I would prefer to see a daily candle staying below this area, below this 45,000 mark, and then kind of get a little bit more excited with a larger correction to the downside. With the upside, well, I mean, it's also a bit of a tricky one here. So if you want to look at some higher levels, well, probably maybe wait for a push above the upside line here, and this one right here, the taken from the low of the 27th of January. But if you don't want to keep an eye on this upside line, then, well, of course, keep your eyes on some of the levels. Now, one of the levels that I'm looking at here is the 50,863 territory, marked near the lows of the 18th and 19th of February. And if we get a nice push above this, then yes, higher levels could be met. Now, jumping into Litecoin, and here, so far, so good. Everything's working out according according to the plan. The plan was basically that if the price, or should I say the rate, falls back below the 185.75 territory, then this increases the chances to see a bit of a larger correction here to the downside. And for now, I would say that yes, the 185.75 territory continues to provide resistance. Yep, it did so, and now it kind of, we saw the rate kind of falling all the way here, almost all the way towards this upside line. So I'm still targeting it. I mean, I'm still kind of hoping to see maybe a bit of a nicer touch here, and then I will take it from there, because again, we'll see how the whole situation develops in the crypto world, but maybe we'll have a nice rebound here. Certainly that's something to keep in mind. If it doesn't, let's say if this upside line doesn't hold, then yes, of course, a break of it may increase the chances for this crypto, for Litecoin, to drift lower. But in that situation, I mean, I would prefer to wait for maybe a drop below this 144.84 zone, marked by the low of the 7th of February, which also coincides with the 100-day EMA here, shown as the green line. Now jumping into AUDNZD very quickly. So again, quick update on this pair. I talked about it last week, and basically so far it's also doing everything according to the plan. The plan was that if we get a drop and we get that daily candle staying below this 1.0673 territory, then below the 200-day EMA, then yes, we could go for a larger correction here, or actually I wouldn't say even a correction, but for just a move lower. For now, I'm just targeting that. Initially, of course, we'll aim for this 1.0630 zone, but if that gets broken, of course, this opens the door towards the lowest point of February, near the 1.0541 zone, approximately around here. For the upside, I would need to see the pair climbing back above the 1.0718 area, and then going for some higher levels. Now, USDJPY, this one's an interesting one, of course, and yeah, I mean, we finally got that pop, and I was talking about this pair last week, the whole week, basically, and what I was saying, that if you want to go for some higher levels, wait for that pop above the 106.11 zones, and yep, we've managed to get that, and today we're seeing a continuation move a little bit higher. My next target is the 107.05, marked by the highest point of August of last year, and then I'll take it from there, because in a way, what I don't want to I don't want to rush into anything, so this could be that next target. Keep your eyes on that one. Even if the pair, for example, decides to retrace a little bit lower, if it stays above this this hurdle, this 106.11, then yes, another push higher could be possible. So I'm not excluding this scenario, of course, as well, but my next target is the 107.05. Now, some of you probably could say that maybe we're just maybe we could be seeing here a possible nice, beautiful channel, which, of course, yes, could be the case, but nevertheless, still the target remains the same, the 107.05. So the channel kind of just gives the let's say an option that we could see a bit of a retracement first and then a push higher. GBP/NZD very quickly on this. So the pair, look at this beautiful explosion on Friday, and is this Friday? Let me just, yep, I think that was Friday, yes, of course. So beautiful explosion to the upside on Friday, managed to climb back above this 1.9114 territory that I spoke about previously. And what I talked about this level and said that if this area continues to provide resistance, then yes, another slide here could be possible. But as you can see, we overcame that area. We also overcame this 1.92 territory as well, and well, today we're seeing a bit of a correction, so which is, to be honest, quite normal. But of course, yes, I mean, if this area does provide support, if the 1.92 does provide support, then we could see a nice reversal here and a push higher. If you want to be a little bit more on the safe side, you could wait for the push above the 1.9316, 17 zone right here, because at the same time, this could place the rate above the 200-day EMA, and then maybe more more buyers could join in here. So again, keep that in mind. So let's see how this is going to develop. But if the pair suddenly falls back below the 1.9114, well, we'll start looking at the downside again. EURGBP. So beautiful reversal here on EURGBP to the downside on Friday, and what I talked about last week, basically what I said that before this jump happened here, and on Thursday morning, I said to you guys, keep your eyes on this 0.8616 territory, which if gets broken could end up sending the pair here, or should I say the pair could end up testing this downside line, which happened beautifully. On Friday we had a push further north, but what I kept saying, that wait for that daily candle to close, because again, or just to see where it's going to end up being in relation to this downside line. And yes, we did get a nice beautiful break here, but it was just a false breakout. As you can see now, the result of all this is the fact that the pair is drifting back down. Now given the pair is quite overstretched here to the downside already, even in the short run, I would say I would like to wait maybe for at least a good drop below the 0.8616 territory, this one right here. I would like to see maybe the daily candle staying below it first, and then kind of maybe considering a bit of a decline. But yeah, for the upside, I still need to wait for that daily candle to stay above this downside line, and then could get a little bit more excited with higher levels. And finally, EURUSD. So this one is a little bit of a messy one. Continues to oscillate around its 21-day EMA, but as you can see, it failed to push further north here. Instead, on Friday, it reversed sharply to the downside. Well, that's understandable because of the strengthening US dollar. And yeah, I mean, that's the little kind of situation that we have here right now. We have an upside line, this short-term tentative upside line drawn from the low of the 5th of February, which got broken, and now the rate kind of remains below this upside line, although it did have an attempt to push higher today, but it's struggling with that. So probably now we need to adjust a few levels here, our kind of strategy with euro dollar. So what are we going to do here is I'm still going to keep an eye on this hurdle, this 1.2023 territory right here, marked by the low of the 17th of February, because if we get a break below this will confirm a forthcoming lower low, and this will place the rate below the 100-day EMA here, shown as the green line. And then yes, of course, lower levels could be met, but until it's going to remain here, well, I'm going to be very careful. If you are looking for something very, very short term, well, you can keep an eye on this hurdle here, which the 1.2059, which kind of I was looking at previously. I mean, it was acting as a good area of support, and you can see actually on Friday it also acted as a very good area of support. So if we get a drop below this area, then yes, it could increase the chances for a further drift lower. But again, that's what I'm saying. Be very careful. Be very careful near this area, near this 1.2023, because that's the kind of the more comfortable level for us in order to consider further declines. For the upside, I need to see a push above the 1.2156 territory right here, and then yes, the upside could be back on the table. So guys, that's it for this session. So yeah, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you really enjoyed this video. Thank you very much for joining in. Thank you very much for your likes, guys. I really appreciate that as well. So have a wonderful trading day today. Stay safe, have your stop losses in place, and I'll see you later at my trader's tea time, 13:30 GMT. Thank you very much, and bye-bye.